Reddit stock has done it again. After rocketing over 17% on Friday to close near $190, the momentum didn't stop. On Monday, Reddit stock tacked on another 7%, closing above the $200 mark for the very first time since going public. Now at first glance, this might just look like the typical post-earnings drift. A company posts a great quarter, traders pile in, and the stock keeps moving. But what's happening with Reddit feels different. It's not just about the numbers from last week. It's about what the company is becoming, what investors are beginning to believe, and how Reddit is now being positioned in the broader AI conversation. If you caught our last video, we talked in detail about Reddit's bold pivot. The company isn't just trying to grow as a social media platform. It's trying to become a next-gen search engine powered by AI. And now, with this latest price action and analyst attention, that narrative is gaining traction fast. Let's unpack what's driving this move, and whether Reddit stock is about to enter a new phase of growth, or if this rally is setting the stage for a healthy pause. So first, let's deal with Monday's 7% gain. What sparked it? Interestingly, there wasn't a new press release from Reddit. No bombshell product launch or executive shakeup. Instead, the move seems to be driven by two converging forces. The first is broader market action. Tech stocks, especially those with AI exposure, were bouncing back after a shaky few weeks. Strong earnings from Microsoft, Meta, and even Amazon helped breathe life back into the sector. And when AI names are in favor, Reddit is increasingly finding itself in that conversation. The second force? Analysts. More specifically, analysts reinforcing the bullish thesis that Reddit is now more than a meme stock, it's an AI-enabled content and search engine play. Over the past few days, firms like Morgan Stanley, Guggenheim, Raymond James, and Citigroup have reiterated or upgraded their positions on Reddit stock. Several of them now have price targets in the $200 to $225 range. And it's not just a speculative bet. These firms are citing strong fundamentals, rising ad revenue, and the platform's unique positioning as a source of real, human-generated data for AI tools. And this is what makes Reddit's rally so interesting. It's not just retail-driven anymore. Sure, there's plenty of buzz on Reddit forums like our Wall Street bets. But there's also real institutional interest now being fueled by the belief that Reddit's content, its search data, and its AI-powered tools like Reddit Answers can give it a moat in areas Google can't touch. Let's talk about that for a second. Reddit Answers is a feature that uses AI to summarize top-ranked responses from threads and deliver natural, conversational answers to questions people are asking. That might sound simple, but it's surprisingly effective. And more importantly, it's scalable. In the most recent quarter, weekly users of Reddit Answers grew from 1 million to 6 million. That's a 6x increase in just a few months. And that growth ties directly into Reddit's larger pivot, becoming a go-to place for search. CEO Steve Huffman has made it clear, Reddit doesn't just want to be a platform where people talk about things. It wants to be a place where people go to learn. A place where AI can extract meaningful insights from real conversations, and where users can trust they're getting information from actual human experiences, not just bots, sponsored articles, or SEO spam. That's a big deal. And it positions Reddit to occupy a very different space than most of its so-called competitors. Twitter and Meta are struggling with content moderation and declining trust. Google is being squeezed from both ends, by OpenAI on the innovation front, and by Reddit on the niche, community-driven side of search. If Reddit can continue executing on this strategy, it's not crazy to think they could build a real business around niche AI search. Now, that brings us back to the stock price. $200 is a huge psychological level. Not just for technical traders, but for institutions, fund managers, and even the media. It creates a new headline, a new moment. And the fact that Reddit closed above $200 on strong volume suggests the market sees this as more than a short-term pop. But that doesn't mean there aren't risks. Let's be clear, Reddit's valuation is getting rich. After these recent gains, the stock is trading at a forward PE north of 160. That's high, even for a growth name. And while the company did return to profitability this quarter, it still relies heavily on advertising for revenue. Its AI tools are promising, but they're not yet generating significant dollars. So the bull case here is about momentum, vision, and execution. Reddit needs to keep growing users. It needs to scale Reddit Answers without losing trust. It needs to monetize its search experience, either through better ad targeting or premium partnerships. And it needs to keep Wall Street excited long enough to let that growth play out. The good news? Reddit is showing signs of doing just that. Q2 revenue was up 78% year-over-year. Ad revenue grew 84%. International users grew by over 30%. And Reddit's data licensing deals, like the one with OpenAI, are creating entirely new revenue streams. These aren't flukes. They're part of a deliberate strategy to evolve beyond just another social media platform. And investors are starting to recognize that. You can see it in the Analyst upgrades. You can see it in the volume. You can see it in the way Reddit is now being included in AI watchlists and mentioned alongside names like Palantir, C3I, and even Microsoft in some cases. It's becoming part of the AI narrative, and that opens the door to long-term institutional interest. But again, we need to stay measured. Stocks don't go up in straight lines. And even the best narratives take time to prove themselves. It's possible Reddit consolidates for a few days. Maybe it even pulls back. But what matters most right now is that Reddit has crossed an important threshold, not just in price, but in perception. It's no longer being viewed as a meme stock. It's being viewed as a company with a roadmap, with data that's valuable, and with AI tools that are gaining traction. That's a meaningful shift. So what should you be watching going forward? First, volume. If volume stays high and the stock holds above $200, that's a sign of strength. It means new buyers are coming in and existing holders aren't rushing for the exits. Second, analyst commentary. If we see more firms upgrading targets or initiating coverage, that's confirmation that Wall Street sees long-term value here. Third, execution. We'll want to see continued growth in Reddit answers, more data partnerships, and maybe even a premium offering or improved ad suite tied to AI features. And finally, watch the macro. This rally happened while broader markets were mixed. If the tech sector continues to gain strength, Reddit could benefit even more. But if we hit turbulence, say from interest rate news or inflation reports, high multiple stocks like Reddit may feel some pressure. To wrap it all up, Reddit's climb above $200 is more than a headline. It's a moment of validation for a company that's trying to reinvent itself at the intersection of AI, search, and community-driven data. Is it the next Google? Probably not. But is it building something that adds value in a space no one else is really dominating? That's starting to look more and more like a yes. Let me know what you think. Are you riding this wave, trimming gains, or waiting for a pullback? Where do you see Reddit heading from here? Drop your thoughts below, and I'll see you in the next update.